Given Tesla's strong performance since the start of the year, investing in Tesla stock now could prove to be a wise move. Undoubtedly, figuring out when is the greatest time to buy in the stock market can be challenging, but arming yourself with the correct knowledge could help you make even better choices. Therefore, if you're considering investing in Tesla stock, here is a video that you won't want to miss as stock investor Chicken Genius explains why this could be the ideal time to buy stock. Hi everyone, and happy return to Tesla. The Federal Reserve has unveiled a new emergency lending plan aimed at increasing the banking system's capability. This plan is supposed to assist in making sure banks are able to satisfy the needs of all of its depositors, following the failure of Silicon Valley Bank a few days ago. In addition to Silicon Valley Bank, a number of other institutions fit this description, possessing bonds that have become less valuable due to the Federal Reserve's significant increase in interest rates. In an attempt to deter spending and lower inflation in the cost of goods and services, the Federal Reserve raised interest rates. However, this move also tightened lending standards, making it more difficult for financial institutions to raise capital. Fortunately, American financial services company J.P. Morgan released a statement after the U.S. Federal Reserve announced this new emergency lending program, roughly estimating the total amount to be used at about $2 trillion. The emergency loan program of the Fed may provide up to $2 trillion to the American financial system in an effort to support the country's failing banks in the midst of the ongoing liquidity crisis. In response, well-known YouTuber and stock investor Ken Tang, also known as Chicken Genius, tweeted that this might present a chance for investors to purchase stock. What does this signify for Tesla stock, and why has Chicken Genius said this? Let's find out, but first, if you enjoy this kind of content, please click the like button, subscribe to our channel, and enable notifications to be informed about any developments pertaining to Tesla. The Federal Reserve has consistently stated that it is committed to bringing down inflation rates as much as possible. However, the combination of the Fed's rising interest rates and the ongoing increase in inflation has had a negative impact on financial institutions and the stock market. When the Fed raises the federal funds rate, which is the interest rate that affects the stock market, it reduces the amount of money available for purchases, which raises borrowing costs for businesses and ultimately affects the stock market. For this reason, stock investors like Cathie Wood believe that the Fed's ongoing hike in interest rates may be a very bad idea. According to a J.P. Morgan announcement, the $2 trillion fund that the Fed had provided was determined by the quantity of bonds that American banks that weren't part of the top 5 banks held. Chicken Genius tweeted that, despite his continued pessimism, he thinks that Silicon Valley Bank's failure won't lead to the failure of other banks. While this will undoubtedly be helpful information for financial institutions, it may also benefit the stock market, and in the not-too-distant future, the Federal Reserve may begin lowering the federal funds rate to boost financial activity. A drop in interest rates has the opposite impact of a rise in rates, acting as a spur to expansion that boosts earnings and creates a strong economy. However, it should be noted that even though Chicken Genius is an avid investor in the stock market, he is not a big supporter of Tesla. In fact, he once said the company's stock would soon drop to as low as $60. He claims that this is because Elon Musk entered the Twitter sphere and discussed how car sales should take precedence above profit margins, which might have an adverse effect on Tesla's earnings and potentially destroy demand. Chicken Genius referenced Elon Musk's declaration that he hopes to sell every Tesla vehicle and that the company's prices may need to be lowered in order to accomplish this. According to the well-known YouTuber, Tesla is currently in the most risky stage of the cycle, when earnings are not yet fully discounted. Chicken Genius has a lot to say about Tesla in his remarks. He talked about how a recession might have a big impact on Tesla's demand down the road in one of his videos. He claims that when the economy is struggling, the car business is among the first to be hit because many people cannot afford the luxury of owning a car. As a result, individuals may not be purchasing cars. Expand on your discussion about electric cars. The stock trader stated at some point in the previous year that, in his opinion, Tesla is seriously losing demand, particularly in China. He continued by saying that, based on shorter wait times for the vehicle, Tesla's backlog is getting smaller here. Tesla has slashed delivery periods in China to as short as 1 week at the same time. Additionally, wait periods for the Model 3 were very short in the United States. Even though it lasted a lot longer in Europe, according to Chicken Genius, inflation will have a significant impact on Tesla and could lead to price reductions, which will destroy demand. The stock investor predicted in July that Tesla will see a decline in deliveries during the second quarter of the year, citing the likelihood of inflation having an adverse effect on auto production and delivery. This prediction came true. Tesla stated that the pandemic's restrictions caused production units in and around Shanghai to temporarily close due to strict lockdown measures, which had a detrimental impact on the company's profitability. The company also reported that higher costs associated with raw materials, commodities, and logistics contributed to the prolonged shutdown of its Shanghai facilities. In the second quarter of 2022, Tesla sold just 89,000 cars in China, but globally, the company sold over 254,000 cars during this same period, up 27% year over year. It somehow failed to live up to analysts' expectations, suggesting that Chicken Genius's prediction might be accurate. However, let's not draw hasty conclusions because, in contrast to what Chicken Genius claims, cheaper EVs will not negatively impact Tesla's demand. If anything, it will greatly increase it. This is demonstrated by the price reduction that Tesla experienced in January, following the lowering of certain of its vehicle pricing in China and the US. Various Chinese media reports said that within 3 days of announcing this price reduction, Tesla had already received almost 30,000 orders for its EVs. Following the announcement of the price cut, Tesla experienced a notable increase in foot traffic at its stores and a large number of new orders. On the first day of the price reduction, a Tesla official revealed that the business delivered over 10,000 cars to China. This is noteworthy, given that local sales in December fell by more than 40% year over year. This is undoubtedly a strong indication that Tesla's demand will remain high even in the event of price reductions. Not to mention, as Chicken Genius warned last year, Tesla was impacted by inflation, although the carmaker did record strong production this quarter. In the second quarter of 2022, Tesla announced adjusted earnings of 2.27 cents per share on revenue of $16.93 billion. Adjusted earnings per share, or EPS, exceeded analyst expectations, gained 56.6% from the same quarter the previous year and matching revenue projections. Although price reductions may have an impact on Tesla's profit margin, which is rising 41.6% year over year, it's crucial to remember that the company has strong profit margins and excellent price control, which enable it to generate significant revenue even in the event that it has to lower car prices. According to Wedbush analyst Dan Ives, Tesla's price reductions will increase demand by 12 to 14% globally in 2023. Similarly, stock investor Garrett Nelson has predicted that Tesla will sell more cars despite having a smaller profit margin following the price reduction. As the carmaker keeps pushing itself to satisfy demand in the largest auto markets in the world, Tesla's electric vehicle (EV) market has expanded. Without question, Tesla currently operates on a worldwide scale, something it did not have a few years prior. In this EV arms race, it also has the margin flexibility to make bold decisions like lowering prices in an effort to take market share. Do you believe that investing in Tesla stock is at its finest right now? If you're interested in learning what Tesla has been up to these last few days, please let us know in the comments area. Click on the following video that appears on your screen. There, we'll see you. I'll see you soon.